everyone, this is Lauren Jubeck from Brick and Tide Home Group, and today I am here with Miss Isabel Williams from Be My Neighbor Mortgage. Isabel is also a veteran and a mortgage professional, so I'm going to let Isabel introduce herself, and then we've got some VA questions to ask her.
Hi everybody, we just had Halloween, so I'm actually wearing my son's costume. But tomorrow is Veterans Day. I am a vet. I actually served in the 82nd Airborne Division of the Army. Got to jump out of a plane several times, so that was awesome. I love doing VA loans. It's my specialty. I mean, we do everything from your normal, traditional single-family home purchase to helping veterans get into multifamilies and turning those into future investments, to building their house from the ground up. We even do VA rehab loans, right? So if there's a loan that can be done with your VA home loan benefit, we've done it before. Yeah.
That's awesome. So it is Be My Neighbor Mortgage, but it sounds like Won't You Be, and you've got like this snuggle bear vibe going on. So needless to say,
Won't you be my neighbor?
So
yes,
you're
definitely.
obviously very approachable.
Yes.
But anyway, so some questions that we have, because like you said, tomorrow is Veterans Day, and there's a lot of misconceptions when it comes to the VA loan program, and we're just hoping to knock some of those out and just spread some good information to be able to help more people use their VA benefit. So the first question is, what is the average age of someone that takes out a VA loan?
Typically, they're in their 30s.
Okay.
The first time they use the benefit, I kind of notice it's when they want to get stable, right? Like I always say, imagine you're coming right out of high school, living with your parents, into the military, and they give you housing. So there's really no reason, or at least it doesn't feel like there's a reason to buy a home because you already have housing. But the reality is it's such a huge missed opportunity because as soon as you're 90 days at your permanent duty station, you qualify as an active duty member to use your VA home loan benefit, right? So why not use your VAH to pay for your mortgage? You know, you get to build equity, hopefully some real estate assets, but it's something that we don't talk about, right?
Yeah.
Like you go in, the only thing they really tell you is, hey, we can help you go to college, travel the world, and pay you to do that, which are all wonderful benefits of being in the military. But one of the unspoken benefits is the ability to use your VA loan to buy a house with no money down, right? Like
that's incredible.
If you have enough to cover your first, last, and security, you can probably buy a house, right? That's basically where your closing costs will cost you out of pocket. So, but I typically see the average age for most first-time buyers to be kind of in that 30-year-old range, and I think it's because that's when they've settled down, got married, probably have one or two kids, and it's just kind of time to get off post.
Okay.
So yeah, I would say in their 30s is about the average.
No, I mean that's great advice because when you think about like age, so if you could tell your younger self something, right, that you've learned, I would definitely have told my younger self to buy a house as soon as you can. Because yes, we're in that like 30s pocket where we've bought our home, and yeah, like if I could have started back then, maybe I would have had a couple properties in my portfolio well before now. And especially in the time when you're in that like younger stage, you have the opportunity for roommates. So like you said, one, you could help get your mortgage paid for, right? But then you also have other members that could join you and depending on the situation, help bring in some income too. So
the beauty of being active duty is that, while you're in service, depending on the housing situation on post, sometimes you don't have to be married to earn the VAH.
Okay.
If there's a housing shortage, they will pay you to live off post as a single individual because they just don't have enough housing. Mm-hmm. That's when I would really encourage someone to use the housing benefit. Now, if you're married, you're automatically entitled, if you choose to, receive the VAH And again, I would utilize that money to go towards buying a house, because the appreciation, the equity that you earn is in the thousands, if not hundred thousands, depending on how long you actually get the opportunity to live in a home. Like, I'll use my house as an example. I bought this house about 3 years ago, right before COVID, and that definitely is not the norm. But we bought for $300,000. Last year, my neighbor sold her house for $600,000, and I've only been in this house 3 years. So to gain $300,000 in equity with just paying my rent, aka my mortgage, it's just crazy. Because like when you rent from somebody else, the problem is the owner's gaining that equity. You're just paying off the mortgage for them, and it just doesn't make sense.
Exactly.
You know, you're going to be lucky to get your deposit back.
Yeah.
Lucky to get your deposit back.
So,
but when they tell you to move and they decide to sell it, you know, they didn't have to pay that mortgage. You did. And so I kind of find it interesting that a lot of times people will say, well, you know, I don't want to be committed. I don't want to take on a commitment. And I'm like, a lease is a commitment. You're literally committing to paying somebody else's mortgage for the next 12 months. What are you talking about? Exactly. You're already committed. And it's just not to your benefit.
And we get a lot of that too, that, you know, renting, oh, well, then I don't have to repair the house. And it's like, yes, but at the same time, you're at the mercy of the landlord repairing the house. And how are they actually repairing it? Are they really taking care of the problem, or are they just sticking on a Band-Aid until the next person, and then it's just a cycle of Band-Aids?
Exactly.
You know, we've, you know, like I said, some of our younger years we rented, and I had air conditioning for like almost like a month with no air conditioning in Florida. And the same thing, like plumbing issues or you name it, and you have to like wait. You can't just run out and fix it yourself and hope that you get reimbursed afterwards either. So let me ask, what is the youngest age that you've done a VA loan for?
I think the youngest he was either 19 or 20.
Ooh, look at that.
Yeah,
look at
really
that.
Young. Yeah, a young single male, which was shocking to me because I tend to see more women buy homes by themselves than I do men.
That's interesting.
Yeah, women, I think there's something to be said about women wanting to have a home, you know, but he was just so driven. He had a plan. He knew where he wanted to buy, how much he wanted to buy for. And, yeah, he was about 19, I think, 19 or 20. I just remember being, like, shocked at how young he was and how driven he was. So,
and he bought it at 19, so I can only imagine where he is now. What he's doing.
Oh, my God.
Awesome.
Yeah.
And then on the flip side, what is your oldest person that's taken out a loan?
79.
79.
Yeah.
So that is something that's almost, it's not just for him, that's a nugget for his family later on, which is beautiful too.
I've found that, you know, people that put off buying a home, it's because it's scary. Right. Mm-hmm. The reason we don't get into real estate is because it's overwhelming. I don't know what I'm doing. I don't want to get taken advantage of. Is this the best thing for me to do? So there's a lot of it's really kind of fear-based. Mm-hmm. We had a client that had gotten really sick. He actually had cancer. Mm-hmm. After coming out of cancer, now mind you, his credit was shot because he was sick, couldn't make his payments on time, and he decided after he survived cancer that he was going to buy a home for his family. And he was in his 50s. And I thought that the mind shift was so interesting because he wanted to make sure they had a safe place to be in case something happened to him. And I think that, you know, we take for granted that we're going to be around for a long time, and we think that everything is going to be fine, and we have time, and we have time, and we have time. And we put off things because, you know, we're afraid to take them on, you know.
Yeah.
Sometimes life pushes you in that direction.
Exactly.
Yeah, and in his situation, because he had an extenuating circumstance, something that he could not control, even though his credit was shot from his cancer, we were able to actually help him buy the house. So a lot of times people think, you know, oh my God, I made a mistake when, you know, I was young and my credit's terrible. I mean, VA is so friendly, and in regards to credit,
Mm-hmm.
there is actually no minimum credit score requirement with the VA. What they state in the guidelines is that if you have reestablished your credit profile in the last 12 months and you've made your payments on time, you could qualify for the VA mortgage,
Right.
regardless of your credit score.
Yeah.
So
and that is a huge misconception that happens.
Yes.
And then
people think that they have to have an 800 credit score with $20,000 in the bank.
Yeah.
When in reality, with a few $1,000s saved up and making sure payment history for the last 12 months has been good to go, you could possibly buy a house.
Yeah. And just talking about that credit piece, so when people decide to rent over buying, I think a lot of misconception happens there too, because they're like, oh, well, I'll just rent. But nowadays we have people that would like first month's rent, last month's rent, security deposit. I've even seen double security deposits in some instances. And then you tack on credit, which most of them, again, are turning around and now saying, look, we really need that 650 plus, and some of them are even higher than that. So that in of itself, trying to even get into a rental anymore is extremely difficult in some circumstances.
Yes.
So that's where
what people I think aren't aware of during COVID, a lot of these, and you can look it up, it's literally online, a lot of these large hedge funds came into the real estate market, and that's where they put their money.
Mm-hmm.
Right? Because real estate is an asset and it appreciates, and they understand this. It's also, if you think about it, a renewable type resource, right? Like, if you don't pay me, I'll just move you out and put someone else in there that will, right? And people wonder why rents have skyrocketed. It's because you're no longer renting from a mother, father, mom, pop type situation. You're not renting from another person. You're renting from a business. And those businesses are in the business of making money, right? Exactly. They want to make sure that the cost of them carrying that property is being covered by you, the tenant. And the moment you don't cover that cost, they're going to push you out and put somebody else in, and they will continue to raise rents. Exactly. Rents are not getting cheaper. The only way you're going to stabilize your ability to financially exist in this crazy environment that we're in right now is to get a 30-year fixed mortgage, where you know that every single month your mortgage payment is X, and it's not going to change for the next 30 years. Mm-hmm. You get into a rental, you're at $2,500 right now. Yep. Next year, you're probably going to be at 26, yep. Probably at 27, probably at 28, and it just continues on the more time you wait. And
you spend all that extra money having to move if you say, oh, well, I don't want to pay this new rent. I'm like, now you gotta move. Now you gotta pay all those deposits again.
Now you're paying all your deposits over and over again every single year that you decide to not renew your lease. The cost of actually, like you said, moving, it's expensive to rent. If you average out all of the actual costs, in comparison, because my mortgage on my house, the home that I live in, this house easily rents for almost $4,000 a month. I'm paying half of that on my mortgage because I bought at a time that was, pretty fair. But the reality being, my mortgage was fixed 3 years ago. Mm-hmm. And in my neighborhood, it has increased for those last 3 years, right? You could have rented in my neighborhood for $2,500 a month, nice 3-bedroom, 2-bath, full home, no problem. Now you can't even get that for $4,000.
Yeah. And that's tough on family.
And it's, to be honest with you,
but
the affordability is an issue. I really don't know, how anyone, I don't care how much money you make, is making it right now. It's tough. Yeah. It's a really hard discussion to have.
It sure is. So we're seeing a trend of the younger generation using what's called the house hacking technique in order to invest, right? Is that something that you're seeing being used with the VA loan? And how would that kind of work? For like a multifamily purchase, for example.
So, again, I love VA for what they do, right, for the veterans. Your VA loan allows you to buy a single family, a duplex, a triplex, a quadruplex with your VA benefit. Now, if you buy a multi-unit, right? So you've got your single family, which is just one. But if you buy a 2-unit, 3-unit, or 4-unit, you can use the rental income from those other properties to qualify for the mortgage on this more expensive home.
Okay.
It's freaking phenomenal. So if I can rent out every unit in a quadruplex, let's just say I want to buy a quadruplex, right?
4 doors. We got 4 doors.
Yep, we got 4 doors. I got the unit I'm living in. I can't count that one because I do have to live in one of the units.
Okay.
The other 3 units, let's say they rent for $2,000 a month, right? I can use that additional $6,000 in monthly income to increase my qualifying budget.
Ooh.
And it's mind-blowing. The only catch to it is I have to hire a property manager unless I have previous rental experience.
Okay.
And I have to have some reserves. And I think it's either 3 months or 6. Don't quote me on that because I can't remember off the top of my head right now. But you have to have a few months, which basically is your mortgage payment in a savings account.
Okay.
You want to know that once you close on this house, God forbid, you can't rent all those units out immediately, that you're not going to be struggling.
Yeah. Oh, well, that makes sense. Yeah.
Yeah, so it's a savings account. Yeah. You just put that little bit of money away to make sure that you can actually afford that monthly mortgage payment while you rent out the other units, right?
Okay.
But that's the only catch to it.
So, do the other people having to rent have to be service members? Nope. So anyone. So I can live in my own door and rent out my other 3 doors. That's what you're telling me?
Correct.
Ooh, that's pretty cool.
And pretty much, I mean, can you imagine if you could rent 3 other doors for $6,000 a month, your mortgage, let's say it's $4,000, right? You're having your mortgage and still earning an additional $2,000 in income.
Yep.
Right?
And have a place for yourself, too.
You're getting your BAH. Your mortgage is fully paid for by the other tenants in your unit. Plus, you're still getting the additional overage of that income. So they're covering your whole mortgage for you. So you're not paying anything out of pocket. Plus, you're probably earning something over and above, based on the rents that you're receiving. And you still get your BAH from the military if you're active duty. Why not?
Yeah. That is
being most areas is at least $2,000 or more.
Exactly. Right. And if you take it from the perspective of not just a financial aspect, but you're also giving a housing opportunity to someone else that might have not been able to have safe housing. Which is, that in itself kind of giving back a little bit.
Yeah, but I've also seen people buy single-family homes because they're single, and they'll qualify for that single-family home on their own, but then they'll rent out rooms in their house and still get the BAH and still get the rent from the other rooms. So it's not just about the multifamily. I've seen people buy single-family homes, sublease their bedrooms because it's their house. They can do whatever they want.
Right.
Getting the rental income from the bedrooms as well as still receiving their BAH while they're active duty.
Yeah.
It's phenomenal.
That's really cool that you can use something like house hacking with your VA loan, and like you said, just have so much extra. Yeah, it's like no-brainer, or shouldn't be a no-brainer. But
it really isn't. I'm like, buy real estate everywhere. Wherever your permanent duty station is, buy one there, buy one at the next one.
So another thing that we're seeing in our particular area up here in the Panhandle is a lot of homes back up for sale that are offering the mortgage assumption for the VA loan. Can you just explain a little bit about what that is and how that kind of may help somebody?
Mortgage assumptions are a little bit more geared towards people that have cash. The reason being, I'll use my house as an example. So I bought my home for $300,000. My rate on my mortgage is 2.75. I'm going to list it on the market. Now my house is no longer worth $300,000. It's worth $600,000. You could assume my existing mortgage of $300,000 at the rate of 2.75. However, I still want my equity. Yeah. So you're going to have to cover the additional $300,000 in equity out of pocket. How you get that money is none of my business as a seller. I don't care if you go apply for a personal loan or if you're getting it from cash,
right.
but you got to bring that additional money to the table. So the assumption of mortgage tends to be more geared towards people that have more liquidity, because typically, if I'm a first-time home buyer, I don't have that kind of money sitting around.
Yeah.
Like, where am I going to go tap $300,000,
Yeah.
right? Unless I've been diligent about saving, but the reality is, it's just not as likely, unless I've possibly sold a house, I've got equity that I have sitting in my bank account, and now I'm just going to transition that equity to you, the seller, and then I'm just going to assume your current mortgage, because you're taking the mortgage as it currently exists. That's what the assumption actually means. You're assuming the mortgage as it is. They will not increase that loan amount to $600,000 for you to get a. They're not going to do it. What they're doing is saying, hey, and take over this mortgage as it is, as long as you qualify. So there still is a qualifying process.
Well, right? I think it is good to note, though, that with rates being the way that they are, if you do have that liquidity, it would make more sense to obviously take the 2% over what we've been seeing, creeping up on the 8s and higher a little bit, right? Because we have noticed that some cash buyers are starting to really slow down spending all that big chunk of change and saying, I don't want to spend $600 right now. That's a little crazy. So, yep, I can do a $300,000 mortgage, and I don't mind giving up the other $300,000, which is not for everyone. Let me just obviously say that, but for the people that have the ability to do that, it kind of helps.
It's a phenomenal benefit.
Yeah, it makes a lot of sense.
Take over the mortgage that already exists. I mean, VA is one of the because you can't do that on conventional. So the fact that VA allows you to assume the existing mortgage is incredible. So
and then is it true that anyone, you don't have to be a service member or to take over a VA assumption?
Now, I will, fair warning, right? If you allow a non-veteran to assume your VA loan, your VA entitlement is tied to that existing mortgage.
Okay.
If they default, you will lose your eligibility that's tied to that house.
Ooh, that is something that's important. So thank you for sharing that. Yeah.
So if you are going to do this, my recommendation is you must do it with another veteran. It is just too risky to leave the entitlement attached to that mortgage, because they will not reinstate it unless there's another VA certificate of eligibility that comes in and takes the place of the VA certificate of eligibility that is tied to that loan. Yeah. So, yes, can anyone take it over? Absolutely. Do I advise it? No, I do not.
Okay.
Because it's a really high risk to the veteran, because they're leaving their eligibility attached to that VA loan. So if the current homeowner, even though you've already sold your house, if that current homeowner stops paying on that mortgage because your entitlement is attached to it, you will lose it.
Okay.
Yeah.
Now, is that something that a mortgage professional would disclose to a client? Or is that something that a realtor would disclose to a client? Or is that something that everybody should talk about? Because I feel like that might be something that gets missed.
It gets missed all the time. Just because people don't understand how it works, right? They just hear through the grapevine that there's this assumption that's available, and you can take over a rate of 2%. And I mean, it sounds amazing. And of course, I'm the seller and I want everybody to buy my house. And so they're like, hey, you've got this great benefit and someone can take it over for you. But if the professionals that I'm working with aren't well versed in how this actually works, I'm not going to know. Yep. There's no book, right? I mean, technically, the VA guidelines are online, so you can kind of look them up. But I'm not going to go look. I'm just being honest. Like most of us hate reading, and if it's not a video tutorial, we're not watching it. Right. So I think that it's just more of a lack of education that really does need to happen a little bit more in regards to this particular topic, as far as the risks that are also involved with having someone assume.
No, I mean, I would like to just know that's an option and know that that's a risk, and then decide if I want to take over that risk or not.
Exactly.
But if it's never
because for the buyer, it's amazing, right? For me, the buyer, it's phenomenal because I'm getting a 2% rate. I'm taking over this mortgage. It's fantastic. It's just that it's a little risky for me as the veteran, because if I'm selling my house to a non-veteran, my eligibility remains with my VA loan.
Yeah.
And somebody else is assuming it, and I'm hoping that they're good people and they pay off my loan and my, entitlement gets reinstated. But again, that could affect my ability to buy my next house.
Right. And they could be great and wonderful people, but like you had said earlier, someone unexpectedly got cancer, life situation completely changed, and things happen. So
that's what happens. So there's a little bit of a risk there. Plus, like I said, if my entitlement, for instance, once you use a portion of your eligibility, so in this scenario, the VA currently, their max loan limit for single-family homes right now is $726,200. What that means is once I use my eligibility, I'm capped at that total dollar amount. So if I leave $300,000 on the table because I, went ahead and turned over and let someone assume my mortgage, that $300,000 is still attached to my certificate of eligibility, which means my next home, I can only borrow $472,600. Something like that, of the remaining eligibility, because I left the $300,000 attached to my home, right? So it lowers my eligibility because it's been broken.
Yeah.
So it does have, for the veteran, more downside.
Okay.
Unless they're selling to another vet. Now, if they're selling to another veteran, all of these issues become a non-problem because that veteran is going to use their eligibility and they will reinstate mine.
Okay.
I don't get released, right? So
vet
to vet, yes. Vet to non-vet, a little risky.
A little shaky. All right, so this would probably be more for someone who is not active duty, so a veteran, that would be able to use what's called a VA renovation loan. So could you just kind of talk to us a little bit about that and how that would make sense for maybe the later stages of life versus being active duty? Because to me, it doesn't make full sense to utilize it then if you have to move around a little bit, but maybe it does.
Yeah, so I think the VA rehab loan is phenomenal, regardless of what stage you're in.
Okay.
So let's say I'm young, and I find this great deal, right? There's this house, it's being sold for $200,000, but the neighborhood averages $400,000, and I walk in there and it just needs some repairs, right? Maybe $50,000 in repairs. I want new bathrooms, new kitchen. So I'm picking up this wonderful deal at $250,000 total because I have to pay the seller their $200,000.
Right.
I'm going to borrow the other $50,000 for my repairs, but once I'm done fixing it up and making it look beautiful, it's now worth $400,000, right? And I instantly gained $150,000 in equity just because I saw the diamond in the rough, right? The house that just needed a little bit of TLC. So the VA rehab loan qualification for that product is the same as it is for a purchase. So you qualify to the exact same. The difference being you have to buy something under your budget. So if your maximum budget, let's say, is $300,000, you want to buy a house that's probably closer to $200,000.
Okay.
So you'll have some room between that $200,000 to that maximum $300,000 to say, hey, this money is going to be used to rehab this property.
Okay.
So I love it for any stage, whether you're in the very beginning of house hacking, whether you're out and you're deciding to do it. You can use a VA rehab loan on an existing house you own, right? But usually in those scenarios, if you already own your house and your house is in pretty decent condition, I usually tell people just do a cash out refi. Less red tape, better interest rates. Because one of the things that people don't realize is whether it's with construction financing or VA rehab loans, those lenders are on the hook for that mortgage with no security from the VA until the work is completed. So that makes your VA rehab loans and your one-time close construction loans higher risk because until all the work is done, the VA will not securitize that mortgage. There's no insurance against it, right? So people always are like, well, why can't I find the VA rehab loan? Why can't I find construction financing through the VA? It exists, but it's a very small handful of lenders that actually do it.
Okay, that's good to know too. Well, that's all we got. That was great. So we busted a lot of different myths between age, what you can actually do with the VA loan, and in forms of investing for your future, right? And talked a little bit about renovations and assumptions, which is also just kind of like byproducts to think about, either a little bit later down the road or right now. Just depends on the situation, right? So I just want to say thank you so much for your time. It was beautiful, and I love that you're such a warm, fluffy teddy bear, inside and out. And
I think that we tend to be terrified of going through the process of being pre-approved because our image of what a lender looks like is, buttoned up suit and tie, and they've got a stamp that says deny on it, and we're scared of just hearing the no. But if you find a good, solid company whose job is to educate you, inform you, and empower you to know what to do next, there's no fear in that, right? Yeah. I'm just asking a question. I'm just being guided towards,
you're on their team. And people forget that. Like, we're on your side. Like, we want to help. Let us help. We want to. But from Eric and I and Brick and Tide Home Group, we just want to wish you a happy Veterans Day, and thank you so much for serving, but also continuing to serve and be passionate about our military community, and just trying to get people into home, which is what somebody and everybody deserves. So thank you. Enjoy your day.
How crazy does it look back there? Oh yeah, it's a mess.
It's cleaner than my house.
My son decided to be a teddy bear or something for Halloween, and he never picked up his costume. So
we'll keep the teddy bear in there. You should have wore it. That would have been great.
The teddy bear outfit.
Oh my gosh.
Look at this thing. So cute. This is what he was for Halloween. I'm like, honey, I think that's a onesie.
It's like what are those called? Snuggies?
Right?
Yeah.
But he wore it as a costume. And we live in Florida, for God's sake.
Yeah.
Like, why are you wearing this thing outside?
Yeah, and you guys are down south, too, so.
Yeah, I don't know. Super hot.
That's why I said it. If I would have known you had a bear, I would have wore like a giraffe or something.
I'm down for it, Lauren. Let's do